Yo, welcome guys to another live market analysis session. Looking at the crypto market today, we do have Mr. Dev Engine Oz himself. Ash, welcome, brother. I'm looking forward to another one of these with you as we kind of recap the week for Bitcoin and do a little bit of prep for the beginning of the new week. How you doing, man?
Hey man, yeah, thanks for having me. I think we had a week off between drinks, but seems like it's a good weekend to do a bit of a breakdown, particularly with the overnight price action. So happy to be here, man. Thanks for having me.
Yeah, man. Always a pleasure having you. Again, guys, we're gonna look mainly at Bitcoin, but we may jump in other things like total crypto, stablecoin dominance. Maybe if there's an alt major or something like that that looks interesting, we might maybe have a little bit of time to jump into something like that. But again, welcome. I see some people already jumping in, guys. If you're coming in, please, if you want to support this show, give us a like, drop a comment. Do a repost of this, helps reach more people, helps the algorithm see that we are producing some content here. Shout out to Wolf Bitcoin for allowing us to run this show here, this live crypto analysis that we're doing. We do it every Tuesday, but then it seems like every other week we're getting this weekend session here with Ash, and it's been fun. It's fun to do the kind of the weekend recap. Looks like we got Cade in the house. What's up, man? Yeah, moaning to Ash from down under. Huh? But and then shout out to Ostium for making this show a possibility. If you guys have not checked out Ostium, go give Ostium a look. We did drop a link to them down below this stream on X. So if you're on X, just go to the stream. You'll see right directly below that there is a link for Ostium. If you're looking to trade any of the on-chain stuff, guys, it's a pretty sweet platform. I've had a lot of people recently, and Ash and I both, where we wanted to jump on and maybe trade some of the US market stuff. We want to trade some commodities, some of the metals. And if you wanted like this simple way to do that without having to, take money out of your crypto exchange, go back into fiat, move it over to your TradFi exchange, and then enter positions over there, dude, you've been able to do it just on chain with Ostium, which has been a beautiful thing. So I remember I took a couple trades against gold on Ostium, a couple silver positions as well. It's fast, it's snappy, really great platform. So definitely check that out. We got TSN in the house. What's up, TSN? You're making burgers and having a good show. Awesome, man. Yeah, Ash is over here having his coffee. But yeah, good stuff, guys. Ostium is indeed goated, man. Yeah, it's a great platform. Looking forward to see how much more they keep releasing as they keep scaling and growing, man. It's going to be a fun place to. And I think that this cycle also made a lot of crypto native folks have to think and realize, like, man, maybe I should be trading some of this other stuff, when crypto is kind of flat or sideways, or if you're not really trading perps and you're really just kind of spot buying and holding, there's been some periods where it's like, man, maybe you wanted to get into some gold positions, silver positions. You wanted to get into some of the indices. So yeah, you've got that ability to do it on chain, man, with just a wallet connection, which is a beautiful thing. But Ash, let me bring up your chart, dude. Let's jump right into it. I mean, Bitcoin had a bit of a move last night, kind of on the war FUD, huh? A little bit of a move there.
Yeah, man, that was. I keep saying I love trying to have the weekend off, and then something like this happens, and we're gonna jump back on the charts and see what's happening. But that's all right, I think we'll be able to go over most of that today, and it shouldn't be too surprising. I think from the more higher time frames, but. Just double check. How's that? How's that coming through?
It's coming through fine, dude. Yeah, you're on the full screen. It's all yours, man. Take it over a little bit. I'll jump in as where it makes sense, but I'll let you kind of give us your rundown, man. What's your outlook here?
Yeah, sounds good, man. All right, cool. Just quick, obviously the disclaimer. Nothing that I'm about to go through is financial advice. Just me marking up charts and giving my basic opinion on things. So you make your own decisions. Risk management, all those sorts of things are your own responsibility. So we'll get those things out of the way. And
Cade, he wants me to fake an Aussie accent for the entire show. I'll work on it for a future one, man. I'll work on it. I will tell you, I'm around enough Aussie folks that I could probably pull it off similar. And then I watch. So I'm into the car scene, car culture, drag racing, big turbo stuff like that, and a lot of it, a lot of that scene is down in Aussie land. So I can definitely
in Australia.
Yeah, man. With the GDRs.
The GDRs, mate. Oh, I did see a GDR yesterday.
Abe's.
Yes. That's actually, you actually did well there. You did very well. Congratulations.
Yeah, for sure, man. All right, but let's get into this.
Oh my God.
Let's do it here.
It's never boring, is it? All right. Just let me a second. I need to put my EMAs on here. I want to show this here. All right, cool. Weekly chart. Still looking interesting. I whacked those EMAs on because, you can sort of just check out like what's going on here right now. Bitcoin is hanging on with tooth, nail, anything, I don't know, duct tape, whatever it's got on this 200 week EMA here. Quite interesting. Now, look, I'm going to draw a little comparison, but it's not the one that I love, to the previous cycle breakdown. And you can sort of see we had a similar type of a little, above it, similar type of little situation here where it sort of bled, popped up, and just reclaimed and then kept it going.
That is... Dude, why? Like, okay, so I'm going to pause you here because it is... Every time I feel like we need to kind of get away from the folks that are just copy pasting last cycle as like an overlay and then just saying, oh, look, this is where we are, right? We've all seen those little charts like we are here. And then it does this type of stuff, dude, where it just plays out so similar. Isn't that wild?
It definitely rhymes at least, right? I mean,
Yeah,
you can say it's different because, like, look, we're above the 200 here, we're below it here technically. So you could almost make it a case that this is actually less bullish than this was. But you can look here as well. They threw a massive inverted hammer here, which would, that's not something you would short there either. That's so there's. It's no one saying this is going to happen right away, because I know that's not our primary case right now, but it's definitely something to take into consideration, So we'll keep it on that. That's just something interesting that I noticed when I was going through the high time frames this morning. I was like, oh, that's something to talk about briefly. So don't get too hung up on it. It's just interesting. I'll just get rid of that. But that's what we're looking at. So we're clearly trying to put in some defense here, right? And that makes sense with being such a high time frame support EMA, right? What I want to look at as well is just to challenge that bias of breakdown, do your little trick, giving us a little invert there. That's getting pretty wiki.
God, I love the invert trick, by the way. It just, I don't know why, it just does magic.
Dude, I love it. It was the best thing I've you.
Yeah.
Not the best thing. I mean, there's been a lot of things I've taken from you, but this is one of the ones that I use on the frequent. So look, there's again, this if you were looking at this being the end of a move, this is looking like it might be trying to round off a bit, perhaps for some upside. We'll see where we close. We still got a day or so left, but let's monitor that as well. Let's just go back to the regular move. So yeah, there's nothing more on the weekly really to go over. People might notice that these things have changed. I lost some of my templates, so I've redrawn some of my areas of interest. I got lazy and just typed AOI instead. So these are still the exact same things. You're effectively seeing the portions of unreclaimed vector candles at the moment, where we know there will be liquidity. And there's some inefficiency there to reclaim. Same down here. Again, we're not talking about this right now. But that's if people are not sure about what they've seen on my charts previously and what they're seeing now, it's the exact same thing. Okay. So nothing more to talk about there. We know where we're sitting. We know we're trying to hold a high time frame support zone. Okay. Get down to our daily, and this is where I'm actually just going to turn my EMAs off because I don't really want them. Get rid of that. Okay. Similar situation where we were the last couple of weeks. We've not really done much besides oscillate and effectively bleed down to reclaim a heap of this large vector candle here that signaled the local lows for us. So no differences here. Nothing really of mention. We are literally bang smack in the middle of it. And you'll see when I drop to the 4-hour time frame, it become a lot more obvious if people aren't sort of familiar with that setup. But you can see impulse consolidation could go on for weeks longer, and we'll go through that as well. Obviously, we're talking about some gaps above that we're interested in looking at, ideally before the theory of it coming lower. But there's time to there's time and there's opportunities in this range if you know how to find them. Let's get to F4. This is where I spend most of my time, to be fair. And this is the one that I generally put up the most sort of high time frame posts about. So if you're new here and you haven't seen what I've done before, we've marked out our quote unquote trap trades for that previous range, which was reclaimed in the last move down. And we basically saw a move of about 54 days before that impulse began. You can see now we're only about, dare I say it, about 50% through this one. Doesn't mean it has to play it exactly like that, but it's just to give you some reference of how long some of these large moves can take to digest before we see the next impulsive move, which could be up or down. We don't know, but the theory is that we are going to be looking for more downside eventually, but doesn't mean that we're going to get that immediately. Okay, so the reason we look at the charts with these time frames is it can give you a little bit more ease in your mind to look at a chart and not panic over a single candle, particularly on a higher time frame, to think that, oh, we're going all the way up now, we're going all the way down now. Whatever your thesis is, it helps you sort of just step back and realize that, okay, whilst we might be looking for things like that, they do not have to happen fast. They can take weeks to play out, and you should, adjust your expectations accordingly. And that's sort of what we're trying to demonstrate here. The only things that I've added since the last stream is you'll take a note of these 50% ranges. All I've done on these, nothing intelligent. It's basically been where that peak was to that low, mark the 50% so that we can effectively identify where the mid-range is for that move. And when you start to see consolidation in these ranges for that period of time, it effectively is marking your POC, right? Your volume profile point of control. So, you could do that, but, I do this just in case my visible range is a little bit out and, it's giving me a POC that I'm, not necessarily interested in. So it's just a little hack that I do to get around that little problem. So what are we looking at here? Well, dare I say it, we are looking at corrective price action. No, probably not surprising to hear me say that if you know the way that I look at things. But for people who are wanting to know the long game here, we are perfectly open to see this, do this for a number of weeks before we eventually see either something like this to give us a move up into these ranges, and alternatively, the exact type of situation just in the inverse, where we maybe spike the highs, come down, and continue our move into these lower ranges. And this is one of those weekly areas of interest that I highlighted when we're on the weekly chart. So it doesn't have to play it exactly like that. We never say this is exactly what it's going to do, but we know the type of price action we're looking for. And at the moment, we're not seeing anything high time frame impulsive. Doesn't mean it can't happen next week or the week after that, but right now we're still seeing continuously overlapping price action, which is by definition corrective in nature. Okay.
The other scenario that we have to be careful with here is because you do get these super defined ranges, and we saw it up in the range above. If you just look a little bit above, right, on your chart, is that
this one up here?
Yeah. I mean, you sit there and you build these ranges, and then you essentially trap in one direction before completely going the opposite direction. And I still think that's where the market really likes to get most people off sides. Here, I'm going to swap to mine really quickly to show like how simply I think we need to think about this sometimes. Is if you look at Bitcoin, I'm going to go to a 3-day chart. Notice this blue candle here, right? That essentially highlights the top of the range and the bottom of the range that we're currently stuck in on a 3-day. It's very clean. You can see everything inside of this is just an inside bar. We've not breached the upside of that 3-day range, and we've not breached the downside of that 3-day range. So there is a little bit of risk here that at some point, I love me my trap plays, right? Like if this thing comes up, traps right outside this 3-day range, it could be what triggers the move that then basically melts through all of this to take the downside liquidity, right? Or you could get the inverse of that, which is at some point we could trap the low side of that range, and then we get that move up, and then it can get really, it can get messy if the market also sometimes will do something like this. You'll trap to the downside, take the upside, and then ultimately head lower anyways, right?
So that's the dirty one.
This is where you essentially expand the range, right? This range has not been expanded. It's only been contracting since we established it. But at some point you could expand the range. And now this could also, for a while, just kind of chop in an expanding type of range before you eventually get some kind of larger move out of here. So yeah, I mean, 3-day range, very, very clear to see that 3-day range. And then even the 1 week range is very clear. You've got the bottom of this huge weekly candle, and then the top of it is up here near 79 and change. So everything since then, I mean, it is trending lower, but it is still pretty much just sideways action, just by definition. Like we're just basically sideways. Like nothing has really happened since this move down. We've just kind of been flat. So yeah, just kind of calling it out there. Is that sometimes we do have to zoom out to these higher time frames just to recognize that nothing's really happened. You know, we haven't gone above 72, and we really haven't gone below 59.9 or whatever that low was that was established there. So
100%, man. And I mean, to that point as well, it's a really good shout out, because that is what they did, and what had us thinking we had maybe
Yep.
one more push up in the last move, right?
Correct.
They effectively did that same thing. They acted impulsive, and they
Mhm.
expanded the range to use your verbiage.
Yep.
And then they ripped it down, right? And that was a really I mean, it was a lovely setup if you were there to catch it. Again, I know that I was looking for more up, so I didn't short that
Yeah.
move. I was hoping
Same.
for a little bit more. I mean, I got in a little bit lower, but that's all.
That's the game we play,
now.
man. That's the game we play, though. Is you're not always going to get the moves you want. Like I love how on your chart you highlight them as areas of interest, and I think that's a great way to actually think about it. Is those are areas that are interesting to us, like liquidity zones, trap traders, key pivots, like on a monthly or it could be maybe an interesting volume weighted average that we're tracking, or an EMA. The market doesn't always give you those. Sometimes it will. There's some that historically a lot of times it will go down to, much like we saw, the 50 EMA was kind of like one of the topics of discussion for a long time, right? Everyone's talking, oh, where's the 50? Where's the 50? And then it became the 200.
Yep.
So you do have those levels that historically I think the market will tend to kind of respect and really, move towards or move away from. But there's also a lot of liquidity levels that sometimes you'll get the front run of it. It's like anything, when everyone's looking at one area or one level, people start to kind of front run it. They're like, oh, I better get in before everyone else in case it doesn't quite hit there. And then enough people do that, you end up kind of shifting that. So there's a bit of like this self-fulfilling prophecy type function to the market, right?
Yeah, it's a real chicken and egg type of thing, right? Because you go,
It is.
Did price
totally
bounce
is.
on the 200 because technically that's where it should bounce, or because everyone expects it to bounce on the 200?
Exactly.
It's to that point as well, like with those EMAs or regular MAs, whatever you like. But it's also the reason why we see people starting to use odd, like non-classical EMA or SMA or regular MA numbers, right? So like I use the 10 because a lot of people use the 13. And the people who will use a 9 instead of like an 11, and they would do all. There's lots of that sort of like
the 4.2,
0.69, like all these like newer ones that everyone's like, oh no, I'm gonna get ahead of it.
That's hilarious. You know what?
It's a thing though.
Popeye had a really good post about this the other day, where he was doing some back testing with some fib levels, and he kept finding that the market was moving to the 0.75 retracement, like over and over and over. It would hit that 0.75, like 75% pullback, right? And he had a comment that there's some people that were telling him like, dude, the 0.75 is not even like a real fib level. And he's like, yeah, look, we can argue about what's a real fib level or not, or we can focus on what's consistently making you profit, which is it's moving to that level for whatever reason or not. It's moving to that level.
And you can dig through that, right, and think, okay, the 7.5. Okay, does that mean, because if you think everyone wants to buy on a 6.18 or a 6.5, right? These sorts of golden pocket ratios, and you go,
yes,
and they go, well, then their stops are maybe just below that range, right? Yep. So you go to the 7.5, you take out all the 6.18 traders. There's lots of little psychological tricks that get played. Because a lot of people will say, if I buy the 6.18, it goes to the 7.86, then my trade's been invalidated, right? But it's a really interesting little well, I mean, I try not to dig into it too much, and that's why I don't like fixed sort of numbers and things like that, because of these sorts of reasons. Like I find like it your invalidation can be a little too strict. Not that we shouldn't have invalidations, we absolutely should, but that's why we like ranges and not necessarily fixed numbers for certain things
not
like that.
Line that it's like above this we're bullish, but
yep,
lower, yeah.
And I mean, even to use an exact example of that, right? Like right here, previous week high. Now we love these ones because they're fixed numbers; they're not support resistance by a range sort of thing. But you see, you got one touch there, and you have another touch here. what I would expect if it was me trying to be cheeky is if I was trying to take people out here, well, I wouldn't just go there. I would take price to
A
here,
little bit above, yeah.
just there, because I'm like, oh, that they're gonna go just above that because that's their resistance. They won't go above that. They can't, but they do, and they will. So yeah, like that's why these lines and stuff are really useful. But like taking a number as an exact is a really I think it's a fool's errand. It's the same reason I tend to not love price predictions. I like range predictions because of those things. We go, oh, where could price go to? I'm like, well, and I hear this in the I mean, oddly enough, in like the macro space, there's a lot where Bitcoin will do this, or if it goes to here, it doesn't matter, and they talk about specific like numerical values, which whenever I hear that, I go, okay, well, to me, price isn't necessarily the important thing. It's how price arrives at that price, and that speaks to price action in itself. Where like if price gets to if we hit $100,000 right here, but you hit it in a corrective manner, that means more to me than hitting 100K as a new all-time high move, because it by nature it hit the price in a different manner with different behavior and characteristics. And that's where I try to spend most of my time trying to understand price action, because I don't really so much care about where it goes so much as how it gets there.
Yeah, there's very much an element of like storytelling and case building when you're talking about this stuff. It's like you're building a case for a bullish outcome, or you're building a case for a bearish outcome. And in that, there's a story of things that may or may not happen, things that, catalysts that could or could not present in the span of that time, or in that process of moving towards that bullish or bearish outcome. And sure, like there's going to be the facts. There's just going to be, at the end of the day, price did this or price did that. But a lot of it has to do and this is where I love looking at liquidity and looking at volume, because I feel like that's what tells the story of what truly happened that then led to that outcome, right? So yeah, dude, this is the stuff that I'll have to think of that exact quote, but there was a guy that had a trading community, and he used to say this quote over and over. I have to go find it, but essentially it was that when to be a good trader, you're like you have to be part analytical, but you have to be part storyteller as well, right? I have to look up his exact words because it was worded very, very, very nicely. It was a brilliant way of thinking about it, but it was like, yeah, you want to be, part-time analyst, but a piece of your brain is analytical, but the other piece needs to be very you need to be telling a story. There's a story to be told here about what's happening.
So yeah, you got to have the those author genes to be able to put things in the most eloquent manner, I suppose, right?
The risk
seem to have.
The risk in that, though, man, is I think like there's a difference between like reading the story that's happening on the charts that the data is telling us, versus a lot of times I see guys that they're trying to do TA or they're trying to do this, but they start leaning heavily into the fundamentals and then like theorizing, well, all of these things could potentially happen because this could happen. And you go so heavily into the speculative side that now you're no different than a conspiracy theorist. Like you're just making up a bunch of stuff that could happen. And then ultimately it's like, dude, like we're just making up stories of like, you know what I mean? It's let's get back to the data.
It's the same story with like if price has moved fast in a certain direction, a lot of people run to what made this happen.
Who's selling? Who's buying?
What's the news that had this? What's Ryan saying? Guys, if you covered, don't go back. I'll rewatch. Are you discounting, not considering, or accounting for the current geopolitical stuff? We might touch on that, not in specifics, Ryan, but. There are things that I'll show later as to why, whilst those things, I mean, no one's saying they don't impact things, because they do. Certain events are always going to have impact on what you see, but usually they don't start. They're not usually like the thing that begins that event. There's usually things that have happened before that on the chart that kind of
I mean, this
you
is kind of
should,
on
yeah,
subject with what we're
yeah,
essentially saying, right? It's like here's a good way to think about this, Ryan, right? Like Ash and I can sit here and we can probably on this chart, just how he has like his boxes of his AOIs or his you could probably put some boxes that say if World War III starts, we're going here. And if World War III doesn't start, we're probably going here. And ultimately, we don't know what the outcome is going to be. We don't really know like the events that are going to specifically take you there, but it's going to move in line with the levels of the chart. It's going to move in line with the structure of that specific asset. I've very rarely, I don't even really know that I can think of a time, maybe very rarely, maybe the COVID crash. I'd have to go back and double check, but it's been my experience that news, events, these types of things, white swans, black swans, they don't really change the market structure. They change the speed at which
yeah,
you get to the structure. It's all it really
yeah.
does.
Good way.
It's an accelerant. It's not really a like a chemical reaction that's changing.
Is it a precursor? Is that the one we were looking for?
Maybe. Yeah.
I don't know, man. I failed science. I don't know what's going on.
So
It's an interesting point to go into that. But yeah. All right, let's get back to this. Geez, we've gone into philosophical mode so quickly.
I know. But you kind of have to, dude. I
happens.
mean, we're just behaving like the macro guys now, you know.
Maybe that's. I'm going to go up and talk to those guys soon. Pick their minds on all things macro. Anywho, let's look at what we've got here. Okay. What I want to highlight here is two things. This point here and this point here. And I'm going to come back to these in a moment. Okay, and that's because we have our trap traders now. Again, for quick summary for people, trap traders are basically the people who go long or short at the exact worst time or the worst possible time you could. And that works in this way as well. If you went long here and they stopped there, came back down, guess who's trapped? The longs. Guess who's trapped? The shorts, right? It's as simple as that. And whenever they come into a zone and they start to protect it, like they've done now, this usually to me gives me an idea that, okay, it's not that they aren't coming for this liquidity, because you'll see I haven't got this marked as liquidity, but trap traders is liquidity as well. Okay. When they come into a range and they do not pierce it or take it back, particularly in what they've done here, doesn't mean they come back next week, but right now, they do not want that liquidity just yet. Okay, that's what that tells me. They scared people out. They took a lot of liquidity back, but they did not reclaim this whole range, which means these people here, these shorts, have not been released. Okay, they are still tethered to that position if they haven't closed, but they have not taken it all back yet. So you just got to keep that in mind. When you start to see price action that stops abruptly above an area that you think is interesting or an area of interest, that starts to tell you something. Okay, that's one of those stories you need to read into.
They're protecting or saving that liquidity for later. Would you say that there's
similar concept? Yeah, it's the that brush fire sort of scenario that we all sort of analogy that we walked through the other few weeks was just because they don't take it now doesn't mean they won't take it later. And what part of this move does is if they don't go down into here, one, they haven't released this liquidity. And what they've done here by bringing it down just low enough again is that's actually brought in new liquidity here. Okay, so you're actually building up new layers of liquidity as they do this. Whilst they are taking some back here, when big moves like this happen, just into a range that's interesting, that builds up an even thicker piece of liquidity right here that they can use. And this is where the storytelling comes into it. They can use later to drive through here and then take us down for that accelerated move to the downside. Okay, no different to up here. They spiked into it. They haven't come quite high enough, which means there's liquidity. They came a little bit higher. They took this liquidity, but they haven't come all the way up here, which means they've kept it there for a reason.
So is this kind of like, I'm going to give you an example. You tell me if this is kind of fitting, but I had a family member who would fast and would abstain from drinking every year for religious purposes. He'd do it for about a month or so. And But what he would do is during that time, even though he wasn't drinking beer or alcohol, he would still buy it. He would just save it. He would save it until he was done with his period of fasting and abstaining, right? And then at the end of that, he would just have a massive party and just go on
Like a big blowout, right?
Yeah, big blowout, just go through all of it. I mean, that's kind of what we're talking about here, right? It's like you're kind of saving it, you're saving it, you're saving it.
Same concept, man. Exact same concept. It works for charts. It works for like anyone who's done like a keto diet and had like a cheat meal, like kind of It's all that. It's the same thing. It's like, oh, hold off, and then take it, and it becomes, and if you think of it that way, it's just a little nibble, and then, oh, I lost control and blah, the ass fell out, right? It's the same thing with this sort of stuff. So these analogies can go on for days. I know I didn't consider that until we just mentioned that, but it's
well, I think these are helpful. Like we're joking about them, and you and I think understand how these concepts work, but I do think it also helps people as they're learning how to read these charts and understand how liquidity works, to kind of have some of those real life examples of like, I get it, that makes sense. Like that's a good way to think about that, right?
I'm going to start putting timber and fire in these liquidity zones so people understand that stuff. But no, I love this. This is good. I'm enjoying this. Okay, cool. All right, so that's what I'm talking about. So these spikes here, this is creating new liquidity. There was already liquidity here. There's tons of liquidity here. You can see what the story I'm telling. Liquidity up here. This is the big chunk. But when we go to the slightly lower time frames, we'll talk about that. So what we want to look at here is basically we are plumb in the middle of the point of control on the 4 hour. We're in the middle. There's nothing else happened now. We spiked high, we spiked low, we're back in the middle. Okay. Let's get into our 1 hour. Now, this is where things get really interesting, and I'll point this in a minute, but a couple things to highlight. You see now we have the 1 hour. I've just marked up the daily weekly close. So this is 8 a.m. for me in Australia. I don't know what the other time is. If I switch to US, I'd be able to see, but that's where it is. Okay, that's the end of our week. There's not a whole lot more to show here on the 1 hour, so I'm going to drop to the 15 because this is sort of where what I did as our swing played out this week. So what I'm going to do now is I'm going to switch on our swing markers, which is the stuff that I tweeted about this morning that I was going to talk through. Okay,
Yep.
so we actually, oddly enough, we were looking for a weekly trap, a weekend trap, which we finally got last week, which was really good because it gave the actually presented what we've been trying to show the last few weeks. But every time we've tried to do it, we've had an impulsive move happen in the middle of the weekend, which this week we've obviously had. This last week we didn't. So this was that weekend trap we looked for. Monday they broke down, and then I distinctly remember this because I was at the gym and we were talking about the State of the Union stuff was going on, right?
Yes.
And we were like going, well, look, we're in Tuesday. We've kind of got a multi-session W here, although they did sweep the lows in your most favorite approach.
Yep.
They gave a multi-session W formation and they broke out. And it was, this was ages. It was like, I forget where that bounce was. And it was around here somewhere. So they swept the lows and they broke out. Cool. And that commenced our traditional weekly swing. And this was probably the easiest weekly swing to identify. I don't think I've seen a cleaner one for a while.
Dude, this is the one that you and I were talking about. Remember in the group, like we had some members that were still pretty bearish, thinking we were going to break down during the State of the Union and stuff. And my rationale for this was actually the daily chart. The daily chart was setting up this beautiful reversal formation on the daily. You remember that? It was that 3-candle turtle suit fractal, right?
I'm going to go look that up later because I've seen you talk about it this week, and I need to go read the details one because it's interesting.
Yeah, so dude, that's mainly why I was bullish at those lows. I was able to get long exposed there, and look, I played the short off the weekend range prior to that, right? So I wrote it down from like 68 and change, and then I positioned long, and I played the weekly move up, which was beautiful. I didn't play any of this move down, but I did play that move up. So dude, that was just clean. It was clean.
I'm just going to show. So this is let me just pop this in the chart. So let me whack this over here. So this is now where I want to talk about this sort of stuff, and this is not me tooting my own horn. I'm just trying to demonstrate how I was looking at this. So
I'll look for a horn sound effect while you talk.
Yeah, if you've got one, yeah, feel free. But we saw the weekly swing develop around the Tuesday, right, which is the day we tend to want to look for that type of move developing. Okay, now I don't normally enter the first range because if you remember, so I'm sort of asleep basically here. So when I saw this, that looked like the left side to me, but we hadn't developed this side. And if I would have normally, and I'll show you how I do this, if I am feeling really bullish or like really into a move, if I was to take this in here, my normal approach would be to use like an ATR of like 2.5 or 2 to give me sufficient clearance to cover something like this, okay? But when this sort of happened, it was all around other things that were going on, and I was like, look, I'd be much rather playing something like this. Yep. And this was good because this happened in hours that I was awake, so I was able to take advantage of this. Okay.
Beautiful.
Now, when we got to this move was fast. Okay. So what I found really interesting this week was we like to see a move take sort of 3 levels, 3 days. That's sort of the method that obviously the Trade Travel Chill, the TBD system that I use. And this move here was the one where I posted. Okay. What do we normally expect to see after 3 waves into the previous week high range? And that's here. Okay.
3 more waves up.
3 more waves.
3 more waves up.
It can happen, but it's unlikely where we were. Right? So
come on, Ash. Give me the 3 extra waves.
It's 3 and then 3 more and then another 3 and then they never get the other way. Yeah. That's what we'd all love. But as you can see, we circled this saying, okay, this is the range. Now, we needed to see what happened. We hadn't seen what I would classically look for as a reversal signal at this stage, okay?
Yeah.
This here, however, was exactly that, right? Big spike into liquidity, rejection, and then they pulled away fast, okay? And this is what set up the reversal this week, okay? Yeah. And we saw, obviously, we saw that eventuate. So when you're looking for these moves, now sometimes they play it on the 1 hour, sometimes they play it on the 15-minute. But what I have found is when we're in these, let's say these tighter fixed ranges like we're in now, these moves tend to exhaust quicker, based on what I've observed. I'm happy to be challenged on that, but I tend to notice this happens quicker, which means the reversal either happens a little earlier in the week, or effectively the moves exhaust faster. Take it or leave it, which both ways amounts to the same result. So this was fine. Now I have tweaked this count slightly, and that's for this one here. So if people go back and look at my tweets this week, I talked this whole move to basically to here. Okay, the previous week low. That's where I closed I had my TP close, and it closed on. I think I had a TP. It was like 60. It was around here, somewhere around here.
Yep.
I'd have to go back and look at the numbers, but that was to me, it was like, okay, that was done. This was happening again. We're on a Friday at the end of US. I don't expect much more to happen after that. Like anything else after that is sort of off the wall and not within my scope of things that I like to do, because I cannot account for price action on the weekends for BTC because it tends to be unexpected, at least for me. So in hindsight, when you look at this, there's 2 things you can assess. You'll notice I've got this little funky little move up here now. In the TBD method, they call this like a half Batman, where it's like one side of Batman's ear, the flat bit, but there's no right side. Okay, so if you want to know what a full Batman would look like, it would look like this, right? Because that's Batman's ears, right? This is denoted as a half Batman. This is what I still call it because it makes sense once you've heard that. It's very hard to relabel that. So that's what I use. Now, I'm open to this not really being the first drop, because if you have the half Batman, this would be your first move. So you could actually count this as 1, this is 2, and this being the 3, which probably lines up better. But there are other...
I almost kind of count all of that as just one big drop level. I'm sure if you looked at it like on a 1 hour, you'd probably just say that.
Yeah. Things... 100% correct. Yeah, when you look at it on those time frames, it can look like shorter than what we're seeing here.
Yep.
Again, this is part of the reason why when we're in these time frames, inside these ranges, I like the 15-minute for rise levels. I will go back and forth between the 1 hour and the 15, to sort of get some because sometimes things can look like something on one level and on one time frame and not on another, right? That's why we do multi-time frame analysis to help us understand what we're seeing and not just blindly trust one thing. But I've left it as this, and there is a reason for that, and that's because if I turn my EMAs on and I get really pedantic about things, I saw a technical break of the 50 EMA with a volume candle, but you could argue that this then didn't really go further. So this is why I'm saying, look, this could be wrong based on the technicals of what you do there. But for me, this wick was enough for me to enter with this consolidation. So when I first entered this, I had a higher stop loss. So I entered this, it was like somewhere around here. Not here, it was like the Asia to UK handover, somewhere around here. And I initially had my stop here because if they were going to go above that, then I knew I was going to get stopped out anyway. And then once the move fell away in the morning, I adjusted back down to here because that was a safer stop loss, right? Then I was secure that anything that happened above there was going to invalidate my entire thesis of this for the rest of the week, right? So that's how that worked. Now, once this had finished, and particularly when you've got a nice big candle like this, got a high volume. It says high volume. It's not really that high volume, but it was compared to these. This was another sort of signal to me going, oh, look, that move's probably done. And then obviously we had this, okay? So hindsight is 50-50. If you remained short here, congratulations to you. I hope you made an absolute bucket ton of tethers or circles, whichever you like. But I was not involved in this, okay? I didn't catch this. So this is the that accelerant, I guess, example that we talked that Ryan was sort of asking about, that you alluded to, bits where we had those pieces of information and what was evidently planned happened on just a much faster time frame. And what I want to highlight is, again, these areas of interest. So I made a post about this one here. Okay, I didn't have this one marked at the time because I didn't think they were going to be coming down here, to be fair. What we wanted to look for was when you see these impulsive moves, we look for those area of interest ranges to be either taken or respected. Okay, now what we saw was this one here. Now this could be a little high technically if you want to, but you can sort of see on this wick here, they came down and they protected it. And that was to me going, that's why I think the swing's done. I could see 3 moves down, which is our swing, and it looked like they were respecting that. So I was happy to say that was done. Okay. Obviously they didn't. So they took this full vector here. Okay. So that AOI is now effectively rebalanced. And this one here is the interesting one because this is the one that set our peak formation. And you can notice they didn't actually take the whole one of this. They took effectively 50% that was left, right? So this is now a really interesting part to take a note of. And this is the one that I'll be looking at for next week. Okay. So what we've seen after that, I'm not involved in any of this. This is a really, really nice bounce. I will, what's the percentage on this? Like a 7.5% bounce on a Saturday, Sunday is it's not the norm, right? And so that's why
it's time for the monthly close, though, man. We need a nice bullish monthly close. You know what I mean?
I've got to look at that actually. That's I might flip over to you to look at that one in a minute if you want.
Yeah, we'll pull it up because I'm definitely gonna look at that. Yeah.
So look, I'm not involved in any of this. I'm waiting to see how this all settles out, and the reason for that is when we have this type of explosiveness and really aggressive move, I'm not involved in this on a weekend. I'll wait to see how futures and the weekly open starts because I'm perfectly open to something really ugly happening and this coming way down here if there's some other, let's just call it accelerant. This is just not anything I'm at all interested in touching. until we sort of see where the dust settles into effectively again this Monday, Tuesday period next week. Okay. If you're trying to play a bullish swing, maybe you think we're going to get more move the rest of this week, you could go through and start to begin counting levels here, which I think is fine. You could clearly count this as an impulse. Okay. I was to say this is a rise, a retracement. You could probably call this another full rise again. Okay. And that could give you the idea that after it looks like we're going to have some consolidation here. So up, down, maybe we come down and we retest 50% US and the previous week low. That would be an interesting place to look for, perhaps, if they are going to give us another move up. Perhaps that lines up with, if you look at this time frame, this is 1 p.m. today. I mean, I'm just throwing numbers there, but if this sort of consolidated the rest of the day, and perhaps what we could see is another level put into the weekly close, which could form possibly part of our week open move. Okay. There's a possibility of that. That's something that will be quite interesting to see. But again, if we come down here and we start to put in some bullish candles and we look like we're holding structure here, I might look at getting involved here, but I suspect I'll probably stay away because I think this move will happen when I'm asleep. But that's sort of effectively where we're looking for the weekly open. And if people haven't looked at this yet, just make sure you are knowing where your liquidity is. So if you want to play the cheat sheet, we grab our little liquidity box. There was liquidity here, which they have taken, right? So we're going to have liquidity right here. Okay, and we're going to have some liquidity right around about here. Okay, these will be some nice ranges to look for the upside. Okay. And similarly to the downside, we know there's an absolute boat ton of liquidity right here now, but there's also going to be a pocket, I would say somewhere in the ranges of around about here, because people would have seen this retest. And then as this started to break out, this is where people would have started to go in heavy. So I suspect you're probably looking at a similar little pocket around about here. And that could also speak to perhaps something like when this comes down, assuming it comes down, maybe they wick into, might be a little bit higher. Maybe they wick into this sort of range here to take a bit of that out and then set up for this next move up. But we'll see where that plays over the over Sunday into Monday, and we'll reassess. And I'll put some charts out with what's going on. But for me, dude, this is it's wait and see how this move eventuates, and we keep very keen eyes on the weekly open to see how the rest of the market, the futures, are digesting the weekly news events, and we'll take it from there. But I would not be longing right at this point. After that, I would be looking for some kind of retracement if you are looking for a new long position. But that's just me, again, not financial advice. So that's about it for me, bro. I'm happy to flick over to your charts if you want to look at some of those monthly levels or something like that, perhaps.
Oh, I was muted on the headset. Yeah, dude.
Yeah.
Let's like really the only thing I want to cover here is, it's interesting, right? So we've been we've kind of been watching what BTC's done here a couple times, right? And I'm going to highlight three times when it's done this already so far. Okay, there, here, and potentially it's doing it again here. Okay, right. So these little 3 candle setups, right? And so far you've got 2 out of the 3 candles formed here, but these little 3 candle setups, man, they've been interesting to watch. It's not really my core framework. It's more or less something that I've been following a couple other guys that are using this heavily, and dude, I could be totally like botching this whole thing. I don't know that I know all the rules precisely, but what I've essentially picked up, and it's what allowed me to get this play here, right? Because I shared this entire thing with you guys before this 3rd candle even formed. But essentially what it was is like on a daily chart, I don't know that you want to use it aggressively below a daily time frame. I found that it works really well on weekly and monthly or higher. But even on this daily chart, you've got this like 3 candle formation that tends to happen. And what ends up happening is it does these very interesting reversals, and we're already seeing that play out. But essentially, like if you take candle one, right? You take candle one and you mark out, I'm going to mark out the low of candle one, and I'm going to mark out the high. Oh, did that wrong. Hold on here. The high of candle one. Yeah, I cannot grab that. Hold on here. All right, there we go. So that's candle one. I'm going to do it again on the next set of candle ones right here. So you got the low of candle one. I'm going to do the high of candle one across. I'm going to do it again on this last one. Low of candle one. I'm going to do the high of candle one. Uh-oh, did not want to grab it. Boom. All right. High of candle one. All right. And I'm going to do it again on this recent one. The low. Come on. Grab it. There we go. Low of candle one. High of candle one. Okay. So, right, this is candle one. This is candle one. This is candle one. This is candle one. You can clearly see low of candle one, high of candle one, low of candle one, high of candle one, low of candle one, high, right? So that's what we're repeating. So what I've been observing is that when you have this and candle two sweeps the liquidity below candle one's low, but doesn't close below it. It just sweeps it and still closes above that, right? So it sweeps below, but does not close below. It closes above. It closes within candle one's range. What tends to happen a lot of this time is candle three will most of the time stay above candle one's low. It certainly won't breach candle two's low, and it goes back to the top of candle one. So you see here, candle three didn't really go below the low of candle one, and then it went back to the top of candle one. Candle three didn't go below the low of candle one, went back to the top of candle one. Candle three didn't go below the low of candle one, went back to the top of candle one. Candle three, not yet formed, right? But it will be in 25 minutes. We'll start printing that candle number three. So it'll be interesting to see if this new candle maybe opens up. You know, maybe initially it throws a little bit of downside, right? Throws that corrective move that you were kind of highlighting. So we get a bit of a corrective move, maybe down into like 65, somewhere in the 65, 66 range. And if it can hold, though, if that initial correction holds above the low of candle one, which is currently 64.9, right? So if we stay above 64.9, I mean, this basically already the last three times it's played out tells us that we should expect a continuation to the upside towards the top of candle one, which is currently at 68.2. So, yeah, it'll be
like some kind of bullish engulfing type of candle. Ideally, was what we're sort of looking for in this third candle formation, right?
Correct. Yeah, and even if it initially corrects down, because they do tend to do that, like they tend to open up with a correction of the downside, and then it ends up being just a wick. Correction of the downside, it ended up being a wick. Tiny correction of the downside ended up just being a wick. So if we were to get something like that, that's this like turtle soup method that people are like doing. I don't know if it's I know it's not an ICT derived concept, but I know it's an ICT marketed concept. I guess they talk about it. So, but yeah, so I mean, like you mark them out. So essentially what that move would look like is that this next candle could essentially open down, come down. Look, I mean, you've got this nice little 4-hour inefficiency here already. But this next candle could come down. It should not breach the low of candle one, which is this yellow line here. But if it did something like that, doesn't go below that, then essentially we're expecting something like this. So we're expecting a corrective move down and then a continuation of this move to the upside, right?
And it's still like, even though this pullback for the second half of this week has been, it's basically almost been a full like one fib retracement, like a full retracement of that move.
But it is still a high
which
low.
Isn't ideal, but yeah, technically it is still a high low. So you know where if that pullback comes and you're looking for that upside, I mean, you then clearly know where your invalidation will be, right? Because
super clear. Yeah.
Really, really, really clear. So and they're the sort of trades that like I personally like. It's if I know exactly where my invalidation is, that's the ones that I'm happy to open and walk away from, because if I'm going to get stopped out on that, well then I was completely wrong. But I wasn't guessing about the trade idea, right? And those are the ones that like no one's happy to be stopped out, dare I say it, but like you feel much more confident entering that position because you're entering with a very clear idea of what should happen, and if it doesn't happen, well then you know that you still followed all the rules that you would normally follow. So in that case, it's technically a good trade, right? You haven't broken your rules.
Correct. Yeah. The key element of all of this is you want a predefined or pre-established invalidation, not something that you say in the moment when it's pulling back towards your entry. Ooh, this is my stop loss. Like if you're not entering that trade knowing where that trade is wrong before you even hit the buy or the sell button, you're going to end up picking, an improper invalidation in the moment because you're going to be emotionally triggered instead of looking at this now and saying, where's that idea no longer valid? Right?
Absolutely, man. I feel like that also creates, for me, that's something that I will feel like in my gut. I'll feel that if I open that trade and I don't really know. And I'll also find that I candle watch way more than I should. And those are all signals to me that I've done something wrong, right?
Yep. Yeah, if you have to force it too much, like if we're looking at this and I can't clearly tell you where my stop loss is going to go, then it's probably not a clean trade that I need to be in, right? I mean, it's just the way to think about it. So, but dude, so far, I don't think this looks unhealthy. Yes, like it is still, on the larger trend, it is still very much like a downtrending channel. Like there's undeniably like that is what it is. Like you're still doing this. But there is a potential, man. If this is trend reversing, like I will highlight this, like you might be actually setting up this, you might be getting ready to potentially try and do a little bit of this.
Go for that. Make a run for that 72, maybe.
Yeah. Would be interesting, dude. That is still the level to come up to. That is still the level to go up there and essentially fail at. And when you're looking at that 3-day range, that's basically where we would want to move to, is up above, 72.2, essentially the top of that 3-day range. So yeah, if we were to go up and get that trap move up there to give us the move below 60 into the 50s, that's kind of where I want it. I want it above this 3-day range, I really
It is. In what's Price like to do? He only plays the VAH and the VAL, right?
Yes. Yep. Yeah.
Which is a good way to. I mean, it's a nice rule to run by, because you're not taking a trade mid range. You're identifying the range extremes. So in theory, your risk to reward should generally be considerably higher than someone who is trying to maybe take a mid range position with no clear direction that's been set. Right. So I like that concept.
And that does put it right above value area high right here, which is basically where this gray box starts to come in, and that 3-day range is right there. That's this is where that drop off is. You can see us go from like the light colored to the dark color here on the profile. Same here, light color into the dark. That's value area, and then here you go into the premium and discount zones. So
love it,
dude. Yeah, I mean, we'll see what happens. This should be a fun week, but I definitely see this little pocket here on this move. You did get a break above this structure here, this like little swing that it had here in the process, right? So you did
little structural break there.
Little structural break. If we get a pullback, holds above this previous day low here as well on this, that would be interesting. And then potentially then you're looking for that move higher. Yeah, could be interesting, man.
I like it.
I'll be watching this one.
I think we're in sync.
Yeah, I think we are, man. And typically, you know me, I'm almost never trying to catch that absolute bottom. Sometimes I do, like this one I think I did well on, but a lot of times this pullback is the one that does it for me, man. That pullback, and then I'll catch that next move after. But
it's the warm and fuzzy entry. I like the warm and fuzzy.
Yeah. You feel a little bit better about it for sure. So, but dude, look, I know we got Taj coming up here like in 20 minutes with the weekly segment of Good Bits, where he kind of covers all the good news and good bits and pieces that are happening in the world of crypto, Bitcoin, blockchain, all of that. So he's gonna be popping in with that here in about 20 minutes, a little bit under 20 minutes. But
we're gonna make sure we clean the desk and empty the bins and stuff, and
a
mess for him as he comes in.
Definitely, dude. Definitely. Man.
Sorry about that last week, Taj. That was a very old yogurt packet that I left in the bin, mate. I do apologize.
Hilarious. But dude, this was fun, man. Thanks again for making some time on the weekend. It's Sunday for you, so I know you got
Yes,
a little
man.
one too, much like me with kids. So appreciate that. These are fun, dude. Appreciate your
They
insights.
are, man.
As always, man.
Thanks for having me, man. And obviously, big shout out to Wolf. You guys are
Definitely.
absolutely killing it, man. So thanks again for having me and enjoy your weekend, brother.
Awesome, dude. And thanks again to our show sponsor, Ostium, for making this a possibility. So with that, appreciate everyone that tuned in. Guys, those of you that were in the comments, giving us a laugh and, bringing up some stuff. Appreciate you guys as usual. And if you're watching this, if you enjoyed it, simple way to support, click that like button, click the repost, share this out, put it in front of more people that you think would enjoy this type of content. And with that, guys, I think we're gonna sign off. We'll see you guys on the next one. We'll see you Tuesday for the next round of live market analysis here on Wolf Bitcoin. Peace, guys.